Now, amid all these challenges that we've been facing and that we broke down over the last few weeks around the economic climate globally, in the developed markets, also the emerging markets, and specifically also about opportunities and risk that corporates face with M&A, with private equity, with all these economic forecasts and strategic plans. I think one thing is clear, that really effective leadership and execution will determine which organizations will thrive in the year and years ahead. The external environment may be complex and fragmented, but strong leadership can turn this volatility into opportunity and real strategic results. And what I want to do is briefly consolidate a few thoughts on how corporate executives can navigate governance and execution in this environment. A good place to always start is leading with purpose and vision. So in times of uncertainty, employees, stakeholders look to leaders for clear direction, so a clear vision. An executive should, I think, articulate a compelling narrative of where the company is headed and why, and not just in terms of profit, but articulated in terms of purpose. So, for example, if a company strategy is to digitalize and become more sustainable, the CEO should communicate how this transformation secures the company's future and contributes to society. So delivering better customer outcomes, reducing environmental impact. A well-communicated vision really becomes, or purpose becomes, the North Star that guides decisions and decision-making at all levels across the organization, which is essential and is specifically vital when rapid change is required. We've seen a few of the advisory consulting firms note that tumultuous times forge formidable leaders, and those who can inspire confidence and clarity when others see chaos really thrive. A second point is to empower agile teams and develop and foster talent. The fast pace of change means leaders cannot micromanage everything. Instead, they build agile and empowered teams. And this involves entrusting teams with decision rights, encouraging experimentation, of course, within guardrails, and flattening the structures where possible to speed up information flows. At the same time, of course, nurturing talent is essential. Companies should invest in upskilling employees in today's world, training on AI tools, looking at sustainability practices, etc., so that the workforce is capable of executing the new strategies and reacting and engaging with the environment that is presented with. Of course, retention of key talent through development opportunities and recognizing achievement also goes a very long way. As workforce expectations evolve, modern leaders also starts to include empathy, understanding employees' needs, flexibility, mental health, diversity, inclusion, and addressing these improves engagement and ultimately also then performance. The third point is strengthening risk management and scenario planning. In a fragmented world that's really rife with non-traditional risks, cyber risks, supply chain disruptions, political upheavals, pandemics, etc., leaders need to ensure their risk management frameworks are updated and incorporated and fit for purpose for this new era. And this means having dedicated risk committees, better early warning systems, leveraging data and analytics for risk signals, and of course, playbooks for various scenarios. As an example, how would the company respond if a key country market suddenly faces sanctions, or if a critical raw material price doubles due to conflict? And here, scenario planning helps leaders and boards preemptively think through responses so that if it happens, the organization isn't starting from scratch. In 2026, companies that can say we saw this coming and we were prepared will have a huge advantage. And this approach echoes a point that I've seen also from a World Economic Forum, that business must become adept to assessing geopolitical risk and monitoring developments to limit the volatility or this volatility's impact. The fourth point is engaging with stakeholders proactively. Leaders today is as much external as internal. Corporate executives should proactively engage with a range of stakeholders, and this is only getting broader: regulators, communities, investors, partners, to build trust, to shape the narrative around their company. CEOs might want to regularly meet policymakers to provide insight on industry impacts of regulations, uh, making the company a thought partner rather than an adversary. Or companies might work with community leaders in areas where they operate to ensure their projects have local support and incorporation. Public-private collaboration can be particularly important in areas like cybersecurity, sharing threat information, or workforce development, again, joint program training. So by engaging stakeholders, leaders can often anticipate issues and reduce opposition. It also ties into corporate diplomacy. As I mentioned earlier, in a fragmented global landscape, companies can easily help ease geopolitical tensions by strengthening economic ties across those fault lines, essentially acting as ambassadors of stability through business relationships. The fifth point, which has come through in the theme, is governance and board alignment. Good leadership works hand in hand with good governance. Ensuring that board of directors are aligned with the strategy and aware of the challenges is of course key. In the year ahead, boards are expected to be more active in areas like technology. Some boards are adding tech committees or bringing in directors with technology experience, and ESG oversight or sustainability oversight is also crucial. CEOs in your C-suite should leverage their boards for guidance. For example, using board meetings to pressure test strategy under different assumptions. What if inflation comes back? What if our competitor merges with another? A strong board and a diverse board can be a strategic asset, providing outside perspective and keeping management accountable to the long-term objectives rather than short-term pressures. A sixth point is to focus on execution discipline. So having a strategy is one thing, but executing is another, and that's where many companies stumble. Leaders in the year ahead will benefit from doubling down on project management focus, clear objectives and key results for initiatives, and frequent check-ins on progress. In a volatile environment, the mantra is execute but adapt. So move forward with plans, but be ready to adjust tactics as new information comes in. Using data to track the execution, real-time dashboards, metrics, and fostering a culture that is results-orientated, but yet flexible to improve execution. It's also crucial to avoid initiative overload. Many companies chase too many priorities. It's better to pick a few big ones aligned to those key themes like digital, cost, etc., and then execute them well. And then a final seventh point is ethical leadership and trust. I think in an era of misinformation, low public trust, ethical leadership stands out. Executives who lead with integrity, being transparent, admitting mistakes, and making decisions guided by values builds trust with employees, with customers, with stakeholders. This trust is invaluable when navigating a crisis. If a company faces a data breach, leaders who have established credibility will be far more effective in managing the fallout than one who hasn't. In the year ahead, companies will continue to be judged on their contribution to society, ESG, equity, etc., and leaders must embody the values that they promote. This is not just altruism; it's pragmatic. As employees and consumers gravitate towards companies that they respect. The global economic strategic deal-making environment in 2026 is one both of opportunity and complexity. corporate executives will need to look forward and have forward-looking strategies, savvy deal maker approaches, and empathetic leadership all at once. And the businesses that succeed will likely be those that can forecast and adapt to the macro trends, boldly investing in innovation and efficiency, capitalize on M&A and partnerships to stay ahead, and crucially inspire and guide their people through the turbulence. The Moody's report made a very interesting note, and I think summarized the landscape quite nicely. And that they noted that diverging monetary policies and fragile bond markets may exasperate financial turbulence, but rapid technology advances offer productivity gains, transformative impact across industries as they render certain sectors and occupations obsolete. So steering a company in 2026 means embracing that duality, mitigating the turbulence while seizing the transformative opportunities. I think corporate leaders should enter 2026 with a mix of pragmatism and optimism. Pragmatism in the knowledge that risk and being prepared for the hurdles. Optimism in recognizing that periods of change often create new avenues for growth and innovation. So with robust strategies and resilient execution, companies can not only withstand the complex environment, but also shape it to their advantage, emerging stronger and more future ready by the end of 2026. I hope this leadership view, based on the economic environment we've come from through 2025, the outlook for 2026, and now the brief guide on how leaders and company leadership could potentially approach the year ahead is helpful. Looking forward to sharing some further thoughts with you shortly. Thanks for listening.